when gold is that close to its high. And now here we are within 2.5% of a record high. Very good chance gold will make a new all-time record high in dollars next week. If not next week, maybe the following week. Yet these gold stocks have a long way to go now to recover, not just from a correction, but they had an entire bear market. That's how worried, that's how much fear there is in this market. There's no confidence in it, which is one of the reasons that you should be so confident. Where other people are fearful, that's where you can be brave. And when other people throw caution to the wind, like in the overall market or like in Bitcoin, that's where you need to be fearful.
In today's news recap, Wall Street bereft of bears, Main Street firmly bullish as geopolitical risk breaks gold out of post-Trump slump. After enduring a 2-week beatdown following Donald Trump's election victory, gold prices saw a strong rebound this week, posting gains in every trading session and gaining nearly $150 by Friday afternoon. Spot gold kicked off the week trading at $2,563 per ounce, and precious metals traders made their intentions known early on, spiking the yellow metal up $10 in the first hour or so of trading and pushing the price to $2,594 per ounce by 8:15 p.m. Sunday evening. Gold continued to test the $2,600 per ounce resistance level throughout the European session, finally breaking through on Monday morning. From there, it was a series of slow and steady climbs punctuated by sharp spikes, higher as a combination of gold supportive data releases and worrying geopolitical headlines pushed the yellow metal upward. The next level of resistance to be breached was $2,625 per ounce, with spot gold breaking through just after Tuesday morning. After a brief pullback following a top just below $2,640, spot gold once again resumed its steady uptrend, hitting the then weekly high of $2,641.42 shortly after. Midnight brought the only significant pullback of the week, with spot gold falling from $2,638 back down to $2,621. But the yellow metal then resumed its multi-day uptrend, and by the North American market open on Wednesday, it was trading above $2,645 per ounce. Economic data then took a back seat to geopolitical news as the ratcheting up of missile strikes and bellicose rhetoric pushed the price steadily higher, with spot gold hitting a high of $2,673 per ounce shortly after Thursday. It then set a fresh weekly high of $2,690 by 10 p.m. and broke decisively through the $2,700 per ounce resistance level around 4:30 a.m. EST Friday morning. Now, before we dive back into the best clips, I've got a deal you cannot afford to ignore. Black Friday's here, and so is your chance to lock in ultimate online security with NordVPN. Listen up. This is especially for you stackers out there. Keep your data safe, stay anonymous, and grab this exclusive offer. 3 extra months free plus a 30-day money-back guarantee. Check the link in the pinned comment. Don't miss out.
Despite the fact that gold has had the best year between conferences since I can remember. I remember at the last conference, there was a lot of discussion about whether or not gold would make it above 2,000. I was one of the people there that thought that it would. Of course, I wasn't the only one. It was a gold conference, so there were people that thought gold would make it above 2,000, but it was below 2,000. And between that last conference and this one, we've had this explosive rally. You would think, oh, there'd be a lot more excitement, a lot more enthusiasm, but not really. I mean, I really couldn't tell much of a difference between the environment this year and the environment last year. I mean, there's just not a lot of excitement yet in the gold market, despite the fact that gold actually rose almost 4% on the week. It closed at 2,715. So back above 2,700, we're only about $35 below where we were when Trump surprised the markets, or maybe not surprised them, but Trump won, and that inspired a big rally in the dollar and a decline in gold. Well, gold has almost recovered all of that. In fact, if you look at its record high from a couple of weeks earlier, we're only about 2.5% below the all-time record high for the price of gold. And if you measure gold in euros or in British pounds, as a lot of people obviously do, because there's a lot of people that live in Europe or the UK, gold closed at an all-time record high in those currencies. And remember, gold was making all-time record highs in foreign currencies before it eventually started making all-time highs in the dollar as well. And I expect that to be the case. It's just lagging a bit due to the strength of the dollar. In fact, the dollar closed the week at about a 3-year high, I think, in the dollar index. It closed at 107.5. The euro is barely holding on to a 104 handle. It got to as high as 112 not too long ago. And the entire rally in the euro is based on Trump winning. Now, I know we got some weak economic data coming out of the Eurozone last week, especially on Friday. The PMIs that came out were particularly weak. But, the U.S. PMIs have been weak too. And so I don't think it's really the weakness in Europe. It's the expected strength in the United States that traders believe will be in sharp contrast to what's going on in Europe, because we've got Donald Trump and people assume we're going to have a stronger economy. We're going to have faster GDP growth. Maybe he's going to shrink the deficits. We're going to have a stronger dollar. In fact, people think that tariffs are going to lead to a stronger dollar. I disagree, but that's what the markets perceive. So you're getting this strong dollar. But I think the markets are also overlooking a big factor, because the currency markets, I think, were still trading before Trump won under the false narrative that we had a strong U.S. economy, that we had the strong labor market. And that was part of what was underpinning this dollar, because there was a perception that the U.S. economy was in better shape than the rest of the world. And so the Fed would not cut as aggressively as maybe the ECB or the Bank of England or other central banks. But that was a false narrative. The fact that Donald Trump was elected in and of itself strongly suggests that that was a false narrative. Because if the economy was as good as the markets believed, Trump wouldn't have won. They would have elected Kamala Harris. The fact that they voted for Trump is an indication that the voters were not happy. The number one issue in the campaign was the economy.
In today's news recap, higher supplies to the UK lift Swiss October gold exports. Gold exports from Switzerland rose in October compared to September due to higher supplies to Britain, but were down from a year ago as high gold prices kept deliveries to China and Hong Kong subdued. Swiss customs data showed on Tuesday. Supplies from Switzerland, the world's biggest bullion refining and transit hub, to Britain in October reached the highest level since June 2021, according to the data. London is the world's largest center for over-the-counter trading of gold. This year's 27% gold price rally, which took spot prices to a record high of $2,790.15 per troy ounce on October. 31 has been affecting physical demand in China, the world's top consumer of the metal. However, gold exports from Switzerland to India, the world's second largest gold consumer and a major importer, rose in October from September amid festival purchases. Before we jump back into the clips, check out our exclusive Black Friday VPN deal. A good VPN is essential for keeping your data private and secure. And with this deal, you're getting top-tier protection for just a few bucks. It's fast, reliable, and a no-brainer at this price. Plus, you'll get 3 extra months free and a 30-day money-back guarantee. Check the link in the pinned comment. Don't miss out.
Now, I mentioned that gold had a good week, was up almost 4%. Gold stocks were up a little bit over 4%, but considering how much they crashed, that was a very subdued move. In fact, the GDXJ on Friday was actually negative. Gold was up like $45 on Friday. That's a very strong day. And the GDXJ, which is, the smaller gold stocks, although it's not, it's supposed to be juniors, but it doesn't really have the real juniors. But, it has some, mid-tier companies that are smaller than the large cap of the GDX. But it was negative on the day. It should have been way up. In fact, I mentioned that gold itself is only about 2.5% below its record high. Yet the GDX is 13.5% below its high from a couple of weeks ago. And the GDXJ is 14.5%. Both of these indexes went into bear markets. They were both down more than 20% in about a week and a half based on the 8% decline in the price of gold. I mean, completely ridiculous. Every market, look at the euphoria. The stock market keeps going up. Positive week for stocks this week. All the indexes, solid gains for Bitcoin. Wild, euphoria there. It's like the only sector of the market where people aren't excited is in the gold sector, right? That's the only place you have fear. Every place else you have greed. Because a bear market in a bull market, when gold is that close to its high, and now here we are within 2.5% of a record high. Very good chance gold will make a new all-time record high in dollars next week. If not next week, maybe the following week. Yet these gold stocks have a long way to go now to recover, not just from a correction, but they had an entire bear market. That's how worried. That's how much fear there is in this market. There's no confidence in it, which is one of the reasons that you should be so confident. Where other people are fearful, that's where you can be brave. And when other people throw caution to the wind, like in the overall market or like in Bitcoin, that's where you need to be fearful. Anyway, a significant news story that came out, I think, yesterday on the market was the president's pick for the new Treasury Secretary. This a very successful macro hedge fund manager, Scott Bessent, is going to be the new Treasury Secretary. It was pretty well rumored. I've known for a while that he was a favorite, but I think last minute people were talking about Howard Lutnick, although I think he's now going to be the Commerce Secretary. But the president is putting together, this very pro Bitcoin cabinet. That's one of the reasons that Bitcoin is so strong, is because there's so many people that have been positive on Bitcoin that are now going to be, in the government. And they're also, of course, they're in the Senate, they're in the House. Bitcoin money has been spread around. The crypto community, I think, was the largest donors in this last cycle, right? They're given more probably than defense, the pharmaceutical industry, the crypto industry, and now they expect to be paid back, right, for their investment in these candidates. I mean, this is the problem with democracy, is you have stuff like this, and now that they want to get paid back. That the agenda of the crypto crowd is the formation of a Bitcoin reserve. In fact, Senator Loomis's new bill actually calls for the funding of that by selling gold. So she's introducing a bill that would require the U.S. government to sell off its gold and then use the money to buy Bitcoin. I mean, it's almost treason. In fact, it probably is treason as far as I'm concerned to do something like that. But it's being done as payback in exchange for the campaign donations. That's obviously what's going on. And of course, if they do that, I mean, it's great for the people who own Bitcoin, who can sell their Bitcoin to the unwilling U.S. taxpayer who is being forced to buy Bitcoin, at gunpoint.
Could this really happen? Are central banks bold or reckless enough to make such a massive pivot in their reserves? Peter's skepticism about Bitcoin being digital gold certainly makes us think twice about how this could play out. What do you think? Are central banks heading down a dangerous road, or is there a chance they might embrace Bitcoin as a major reserve asset? And how would that impact gold's position in the financial world? Let us know your take in the comments below. If you found Peter's insight insights valuable. Don't forget to like, subscribe, and hit the notification bell so you don't miss our next video. Your feedback helps us bring you the most relevant content. See you in the next one.